Select Committee for our hearing today on fraud and loss in the COVID financial schemes. We have three panels this morning. For the first panel, we're delighted to welcome Lord Agnew, who until recently was a former minister for the government with responsibility for anti-fraud measures. Lord Agnew, if I could start with questioning, all of these COVID schemes were Treasury decisions that were delegated to the Business Department, which was delegated to the British Business Bank, which was delegated to the actual banks to administer. You sat predominantly in the Cabinet Office. Why were you not able to get the anti-fraud measures that you wanted to see in place through that whole chain of command?
Well, firstly, my role in this was very tangential. Although I had responsibility for the counter-fraud function, the reality is the counter-fraud function was frozen out of the discussions right at the very beginning, so that we were never involved, and this was a very small part of my portfolio. I was initially thrown into manufacturing ventilators for the first 3 months of the crisis, and so I was not closely involved with this. I was never consulted by anybody, and it's only when I started to hear the problems anecdotally that I tried to get involved.
You presumably said to the Chancellor or the Business Secretary or someone in government that you felt that you should have been involved?
Of course. And
they said to you?
Cut out.
Right. And why do you think they told you not to be involved?
I think it's, to be fair to the whole system, one has to remember what it was like here exactly 2 years ago, almost to the day actually. The system broke down. I mean, the government was absolutely terrified of the implications of COVID. And so this was seen as an important response to protect the commercial part of our economy, and particularly the smaller businesses. And intellectually, there was nothing wrong with the idea. As I said last week in the Treasury Committee, the Swiss government did a very, very similar thing, as 100% state-backed guarantees for smaller businesses in the economy. So there was never any disagreement. It's the implementation that has been so woeful.
In Switzerland, they put quite a lot of conditions, didn't they, on what public funds could and couldn't be used for, and the liability of company directors if they did otherwise. We didn't do that in the UK. Do you have any idea as to why?
I don't, but I mean, you're right, it was very, very loose. But there are still protections in the wording of the agreements. So if the will was there, a lot could be done. So, for example, one of the figures I pressed for and they refused to give me was how much money went from the business bank accounts of the recipients of the loans to the individuals who were directors or shareholders of those businesses, and in what time frame that money went across. Because we all heard anecdotally sports cars being bought up and down the country by recipients of business bank loans. Now that is a fraud. That was in the wording of the agreements. That is perfectly legitimately able to be recovered if the will was there.
You just said you asked them for the information and they refused. Who was them?
Well, the British Business Bank. I mean, the most recent letters I wrote were on the 16th of December. I wrote one to the chairman of the British Business Bank and I wrote one to a senior official there. That followed a meeting I'd had the month before, and I'm going to give you these so you can have them, because I hear recently that they're blocking the release of these on FOI, because that's what they do. They become more and more defensive. But in my meeting on the 18th of November with some of the people you're interviewing today, the first action point, which I had required from the meeting, was British Business Bank to provide a dashboard illustrating bank performance on business bank bounce-back loans. That was sent. When I had no response, I then wrote a follow-up letter on the 16th of December, and I asked for that. I asked a number of other questions. By the time I left, nearly 2 months later, they still hadn't answered the letter. Now, they have answered the letter, but they haven't answered the questions. You know, that's the way it works, isn't it? The same with the chairman. He got a letter on the same day. He hadn't answered it. He came up with a ludicrous excuse that he hadn't received the letter. Well, I then checked with the parliamentary Lords attendants, because what you do, you send electronic mail into the system. There's a shield to make sure that nutters and people can't get straight through to the recipients, and then it goes on. So the day the letter from my office was sent, it was forwarded on to him at 16:47 p.m. on the day the letter was written. So he'd had the letter, but he just hadn't bothered to look at it, presumably. Anyway, it took him nearly 2 months to reply, and again, didn't answer any of the questions. So now this is the repeating theme that has gone on over the last, certainly the last year. But I know we've only got a very few minutes here today, what I want to try and do is wind you up into the sort of fury of frustration that I have, because the British Business Bank have presided over one of the most colossal cock-ups in recent government management, and taxpayers are paying for this. And there is still a slither of time to stop it. That's why I go on about it. This isn't something that happened, now we're going to have a long-winded inquiry. If you move fast today, you are the last line of defence. I have failed, but you have the power to get this information out of the British Business Bank. And today, if they cannot supply it to you today, then you know there is a problem. If they say to you they'll give it to you in a week, fair enough. If it doesn't arrive in a week, they haven't got it and they don't know how to get it. So I have got 4 key questions I want to give you. I'm sorry, I don't want to dominate proceedings. All of you want to ask questions, but these are questions you must ask today, please. How much money has been paid out by the Treasury so far on the 100% state guarantee? There is no data on this, broken down by loss class. How much for fraud, how much for credit? And how much of the original 47 billion paid out on these loans went back to the banks? That's important, because the banks benefited from this, because many of them immediately rang up the recipients and said, look, why don't you pay off our overdraft, pay off that lease, it's cheaper money, and so they've probably had 10 billion. Therefore, they have a huge moral responsibility to do their bit here, even if the conditions are weak. Next one is, what protocols have been agreed with the British Business Bank and the lending banks on the level of activity required to pursue fraud? Now, where is the protocol? I asked for it, I never got it. And then last, and probably most important, when do we expect to see a proper public dashboard in the way that the Swiss government produced it? Now, why have they refused to provide that, despite many, many requests?
Well, thank you for that. I'm amazed that, as a minister, you didn't get answers to your questions. I mean, that has to be unusual, isn't it?
Well, Mr. Jones, one day you'll be a minister and you will experience exactly the same. So good luck. That's the way it works, I'm afraid. That's why I resigned. If I was able to get the answers, I would have got them. I mean, I'm not a petulant individual. I believe firmly you stay inside the tent fighting your case absolutely up to the last minute. But when I was asked to stand up publicly and defend the record of the British Business Bank in this area, I simply couldn't do it. Not because I'm some wonderful, sanctimonious hero, but I'm not a crook, and I could not defend it publicly. It is indefensible. And if you could say, well, I failed as a minister. I did fail. Now, one day you'll have a chance and you'll see exactly what I mean.
Well, I'm amazed to hear that, but you are right, of course, that parliamentary select committees have the power to summon documents, and I'm sure witnesses from the British Business Bank have heard your questions. Tonya Antoniazzi, please.
Thank you very much, Chair. Lord Agnew, with the bounce back loan scheme, if a similar scheme were to be ever put in place again, with a similar requirement for quick delivery, what could and should be done differently?
Well, the first thing is that there was a conflation or confusion that doing a few more checks at the moment of issuing the loan was going to materially slow down getting the money into the economy. That is total and utter rubbish. But that someone bought the mantra, and so that's what happened. So if you ask, you've got some banks coming in today, you ask them about their normal fraud markers that they have on any loan processing arrangement. They will have at least 50 markers. And these are all done instantaneously. This is real-time data. It's not we're going to take a month to do it. But a lot of those were lifted and were not required of the banks. So that is why we have seen the sort of chaos that has emerged. So lending to companies that have been dissolved, lending to companies that hadn't even existed before COVID, and on it goes. Simple checks would have pulled that out without delaying the money.
And are there any government resources and data sources, for example, Companies House, register, that should be improved and maybe maintained more regularly in order to stop that?
Well, there's a whole extra issue here, which is linked to the Economic Crime Bill, and I was there for the final knockings last night, and we've started our journey. I hope to goodness we get the second one quickly, because the first one was only hors d'oeuvres, frankly. So there's a huge body of work there, but I'm reluctant to get into too much detail here today, because you've got witnesses today who can solve a lot of these problems now if they had the will to do so, and they knew that the consequences of not doing so would be dismissal and damage, permanent damage to their reputations. And that's the two levers you have.
Okay, thank you, Lord Agnew.
You just said that the banks, for example, had the systems in place to do these checks quickly in real time, and they chose not to. They would probably say to us later, I assume, it's because the government asked them not to do so. If they didn't push back on that, do you have any suggestion as to why?
Well, they were under enormous pressure, like everybody else, and so if they were told by Treasury, whoever it was, oh, don't worry, just get the money out, that's what they would have done. But I know, and this is where we come back to the dashboard, you will see, when you do get the data eventually, that there are enormous discrepancies in the performance of the individual banks. There are some banks who are really good, and one of the banks you're meeting today, and I'm not going to use names, did it properly. They didn't drop all their fraud markers. They kept all those checks in place, and they got rid of a huge lot of dud applications. Other banks were less scrupulous, and they just piled the money out of the door. So that's why the dashboard is so important, because you will then start to see the very variable performance of the participants.
Thank you. Andy McDonald, please.
Thanks, Chair. I think we're talking about somewhere about 4.9 billion in fraud of the 79 billion that went out the door.
We haven't a clue.
We haven't really a clue.
I mean, why? This is the frustration. We're not getting any data. So when I did my question, when I resigned, I was given a piece of data then which said that we had paid out something like 960 million on the guarantees. This is at the end of January, and that of that 220 million had been for fraud. So 220 on 960 is nearly 25%. Yeah. Now, it doesn't necessarily work that way. Of course it doesn't. But we're all blind, and we shouldn't be blind. The data should be there. Yeah. And they keep saying the scheme is too early, too fresh for data. That's rubbish as well, because not about 70% of the loans went out in those first couple of months, May, June, July of 2020. There was a 12-month holiday on payments, so you could say, right, no visibility on performance then. But from June of last year, there would be data. So where is it?
Yep. There was a written question by John McDonnell to Paul Scully, and the answer came back at this scheme design level. The rules of the scheme set out minimum standards in relation to fraud, which highlight action lenders are expected to take to identify fraudulent applications. The British Business Bank's audit function enables them to sample portfolios of lending to assess regularity and take action if required. And goes on to say for the bounce-back loans, we continue to work extensively with BBB and the lenders to strengthen the anti-fraud systems in place. Is that an accurate account of what actually happened?
I think it's like the description of the French army at the outset of the Second World War. People toured the lines, they saw all the emplacements, they thought everything was fine. But the reality is that you pushed it, there was nothing behind it. I mean, the fraud analytics was so weak that the Cabinet Office counter-fraud function managed to get a little bit of money to go in and do the work, and we did that, and it threw up some alarming data. It showed that there were £1.4 billion worth of loans on the sample that had a high risk of fraud. So these were things like companies that were dormant in the 2 years before they received the loans. They hadn't done anything, but they got the money. Companies that were dissolved prior to COVID that were still receiving loans. So all this data was flushed out. But what's been done with it? But it gets worse than that, because this piece of money that we were able to get expires at the end of this month, in about 12 days' time. When we asked them what they were doing to continue the process, the British Business Bank and BEIS said they had no money to continue the analytics programme. So that is ending in 10 days' time.
Oh. So in terms of the chances of getting any of this back, as we're currently structured, Are we saying this is just too late? There's little or no prospect of getting this money back?
It's not too late if you get on with it.
Yeah.
Because, as I've said right at the beginning, the banks, if they even don't have a legal obligation, they have a huge moral obligation to get stuck into this. You know, if I'm right, and I'm making the number up because I have no visibility, if they receive £10 billion of the 47 to pay down some of their doubtful, some of their marginal credit risks, that has saved their bad debt provisions. Now, we're seeing huge dividends coming out from these banks in the last few weeks. Everyone's done jolly nicely there, the management and the shareholders. If that 10 billion was that they'd had to take that as a hit on their own balance sheets, they wouldn't be paying out these dividends. So they have an absolute obligation to help us go after these people. But there needs to be some structure, there needs to be some data. Some of the banks may be, and you'll find that out today. But the thing is not aligned properly, because once the guarantee has been paid, they're still expected to go on chasing for another year. Well, why would they bother to do that? There's absolutely no alignment of interest.
So are you saying that the British Business Bank just isn't resourced and structured in a way to pursue this fraud?
It's not about resource, it's about common sense, and it's about getting the right people. They didn't even have a fraud function in place when COVID hit 2 years ago. So they hired in a very good consultant who did some good work, actually, and wrote some good reports and wrote advice to them, and you must get this information, because I think they largely ignored that information. So he was saying to them, do this, do that, put this in place, and I don't think they did.
Thank you.
Thank you. Mark Pawsey, please.
Lord Agnew, can I just ask, if you think the British Business Bank were incapable of managing this process effectively, why do you think the government gave them the job?
Well, again, these decisions would have been made in hours, probably, let alone weeks. And it was a vehicle sitting in the machinery of government. It had it
happened to be in the right place at the right time.
Yeah, they just happened to be the only kid on the block at the time. But the crucial weakness of the British Business Bank is it's not regulated like any other bank in the country. It's not regulated by the FCA or by the PRA. So its regulator is BEIS. BEIS have no experience in the regulation of a bank. So no one was watching them properly. You know, the accounting officer of BEIS hasn't a clue about banking. I bet if you ask the sponsorship team, which is the team that manage all their ALBs, how many of them have got banking regulatory oversight experience, I bet that none of them have it. So you've got this whole chain of weakness, going back to Mr. Jones's point at the beginning. You know, there were weaknesses all the way through the system.
Thank you.
Thank you. Nusrat Ghani, please.
You talked about the lack of structure to chase the money. Is there just a lack of leadership? Because surely if there was a desire to fix this...
Normally comes down to leadership, doesn't it?
So
the
where
fish rots from the head down.
Yeah.
So I'm surprised you haven't got the chairman of the British Business Bank here today, and I hope very soon you will. I wrote him a letter. I asked 13 questions. He didn't answer it. He answered the letter after I'd left. He didn't answer any of the questions.
Can I ask, Lord Agnew, when you were a minister, how often did you meet the chairman? What was the relationship like then?
I had no formal relationship. You know, this is the point. I mean, the whole counter-fraud effort across government is very disparate. So only when I impose myself, I think I spoke to him in my tenure maybe twice.
Who is he accountable to?
Accountable to BEIS, to the sponsorship.
Who in BEIS?
The sponsorship team. So in every government department that has ALBs has a thing called a sponsorship team. They are responsible for the management of all of the ALBs in their state.
Who runs the sponsorship team?
I beg pardon?
Who runs the sponsorship
team? Well, ultimately
team?
they report to the permanent secretary, who's the accounting officer. That is where the line of command goes.
How close do you think the permanent secretary was throughout the process that the British Business Bank just wasn't fit for purpose for doing this job?
You'll have to ask her.
Did you ever ask her?
No.
Were any discussions ever took place when you were a minister around this at all?
No, my discussions were tangential, as I have said, because this was not. This was probably 4 or 5% of my portfolio. My main efforts were to try and get the counter-fraud team in the Cabinet Office into the room to have discussions, because they are a very, very knowledgeable expert team, and to try and get a bit more money out of the Treasury to arm them to go out and do this work.
Was there any anxiety, or were you aware of any conversations between the Treasury and BEIS that this wasn't going, or this isn't working well? Was there no ministerial level conversations where people were briefing notes not sent up?
I'm not aware of those. The point is that the line of command is very, very clear. You know, the accounting officer of Bays, the sponsorship team, the oversight of the board of the British Business Bank. But those are the lines of command. I wasn't aware of the full horror until quite a long time after the whole programme had been unveiled. I mean, we tried to get into the room during these discussions, and we were not listened to.
I know you're here for a short period of time, so this is hopefully my final question. But so, when do you think the sponsorship team were made aware that there was a problem here? How long do you think they kept that information close, or when do you think they may have started sharing that information out?
I have no idea, but I think you're being too backward-looking with all this. You know, we've got a problem now, and you're looking to dig into a problem that happened 2 years ago. I respect that, but actually, if you want to protect taxpayers' money, you should be going after the data that can be made available now and pushing the banks to do their job. That's the priority. You can have your long inquiry later when all the money's been lost, but let's try and save some of the money now.
And that requires a permanent secretary, sponsoring department, and both Bayes, Secretary of State and the Chancellor to get on board.
Yeah.
Thank you, Chairman.
Well, I'm amazed that the insinuation is that the Chancellor and the Business Secretary are not on board in the effort to recover an enormous amount of public money.
I'm not saying they're not on board, I'm saying they're not necessarily focused on it. And to be fair to them, I don't see why they should be having to crawl all over the detail. The Chancellor came up with this intervention, which was a perfectly legitimate one. He reasonably assumed that the machine would be capable in implementing it in a reasonable way. Now, he would have said something like, we want to have a light touch to get this money out quickly. But the analogy I use there is if I pick you up on the side of the road, you've had a heart attack, I get you into an ambulance, and I say to the ambulance driver, get to the hospital now. I don't expect the ambulance driver to drive through a bus stop and kill half the people on the way to the hospital. That is the way that it seems to have been interpreted. Now, I don't blame the Chancellor for that. He cannot possibly be over all the details. That's why the administrative machine should be taking responsibility.
Do you think the British Business Bank should be moved out of Bays and regulated?
I think the first thing that should happen is the board should be sacked, because we are in this ridiculous position now where they are doubling down on their defensiveness. That's why you cannot get any information out of them. Because they are trying to defend the flaws of 2 years and beyond ago. So they've got to go. Sooner the better, because you'll get a new team in and they will want to solve the problem. The next thing is, yes, I agree with you, it should not be regulated in this ad hoc way. It should be properly regulated by the PRA and the FSA, who absolutely understand how to regulate banks. I mean, for whatever criticisms you have of them, it's a pretty good regime, and that's what they need.
British Business Bank officials might say that before COVID, they were comparatively relatively small. They administered a small number of schemes, and they would probably say they were doing a good job doing that. And when COVID happened, they were given this enormous responsibility by the government, huge increase in activity, financing, responsibilities for delivery and oversight of programmes. Isn't that a fair defence?
Well, it's a perfectly rational one, but then they ignored help when it was offered to them. And Bays, as I said in one of these other committees that I've attended, they had 2 counter-fraud officials in the whole department. And they weren't going to listen to the counter-fraud function at the centre. So, yes, you're right, it would have been a small, cosy little operation. Suddenly the balance sheet is expanded by multiples of hundreds of %, and the game changes. But they didn't lift their game with it, or have the humility to say, look, we need help here. That's what happened. That's why I want you to get the minutes, copies of those memos from that fraud consultant who was there right at the beginning. Just see what he had to say.
Thank you. Richard Fuller, please.
Thank you, Chairman. And for disclosure, I should say that I'm an advisor to a fund, some companies which may have applied and may have obtained business bank loans. Lord Agnew, thank you for your focus on how we save taxpayers' money now and the clarity of the actions that we could take to help save taxpayers' money. You've given us some useful questions. You've mentioned that as far as the business bank, you think there needs to be a clear out of the senior executive team, the board rather, at the business bank. Could you tell us a little bit more about what actions are needed now to get leadership, the necessary levels of leadership in government to achieve that, given that people, as you say, have so many priorities, and what specific actions on the commercial banks you think are needed to stop further money leaking out?
Well, the first thing is the whole fraud landscape is completely atomised across government. So that there are about 20 to 25 different agencies all having a go. but there's no coordination. So there needs to be a central function that has oversight. It should probably have a minister, but there needs to be one proper organisation, or at least access, so everyone is talking to each other. So, for example, HMRC have got different powers of recovery than BEIS because of the flaws in the legislation. Now, people aren't aware of all this detail because it's so buried into the bowels of government. But if we had one oversight body, that would be a huge step forward. The next thing is the funding. Now, I'm not someone who goes around bleating for more government money, but there needs to be a much clearer funding landscape, and there should be very strong expectations of what the money does. If they're not returning 2 to 3 times of what they receive every year, they're not doing their job properly. So there's a very clear metric there, but that doesn't exist. So when they put a lot of money into HMRC to get the furlough fraud in February of last year, I wrote to the Treasury, I said, don't just pile all the money and all the bodies into the Treasury. There are other parts of government that are far less well equipped to deal with these problems with fraud, but they didn't listen to me.
And I think in your contribution yesterday in the House of Lords, you talked about an annual report for further public exposure about this. Could you just mention to the committee a bit more about your ideas on that?
Yeah, well, this is the thing that governments hate, because it shines a light into areas which they don't necessarily want people to see. But I don't agree with that. I believe that transparency is the best way to run a good government. Now, not to the nth degree, but something like this, an annual report by whoever was to lead this cross-government fraud authority, just setting out the landscape, showing where the problems are, and showing what needed to be done to address those problems. If that was done once a year, submitted to you in the House of Commons, it would give a chance for people to understand, because even the NAO reckons that we're losing, at its lower estimate, around 30 billion a year in fraud. Now, I don't say we can get rid of all that, but if we could cut a third of it, that is where I come back to my point. There's a penny on income tax, or off income tax, available if we just had a bit more will to be more coordinated.
Thank you. Alan Brown, please.
Thanks, Chair. Sticking in transparent reporting, so loans that were issued up to the 31st of December 2020, the government required to report that information about state aid granted under the COVID loans to the EU under the EU state aid rules. Now that publishing did include the business names and the amount of funding received by these businesses. So should the government continue to publish this data? And if so, publishing it, how helpful will this be? And will that help shine a light and maybe let other people and investigative journalists, for example, start to drill down into where this money went and possibly ask other questions as well?
Yes, absolutely. I mean, this is the other ludicrous thing that BEIS have said, that they're not going to publish all those who are recipients of business bank loans. I mean, it is absolutely inexcusable behaviour. Of course they should. They receive money from the government on very, very preferential terms. So I completely agree with you. We should be publishing this data. And I would encourage you to look at the Swiss government's one, because it's all in English and it shows you there's a metric of data kept up to date on a virtually real-time basis. Why can't we do that?
Why would the government hide behind, I think usually they hide behind, it's commercially sensitive information. Why would the government not want this information published?
Well, you better ask the government that, because I don't see any possible justification for not providing. The taxpayers have paid for this, and they should know what's happening. There's no reason at all. But it's the kind, back to Mr. Jones's point about ministers not getting information, that is a classic stalling tactic that you get from the machine when you're trying to break it open, and it's total rubbish.
And do you think ministers themselves should be demanding this information, as well as apparently being frightened to publish it? Should they not be demanding that, and demanding that's really... Well,
I demanded it for a long time, unsuccessfully. This is the point. I think people who've never been ministers seem to think that ministers have almost godlike status. We're just cogs in a machine thrashing around. In my own case, I had 25 submissions a day on average, another 50 pieces of correspondence a week. You're covering a huge landscape of activity, so you get one area. Following that up is very tiring and very, very frustrating. I mean, I had 8 people in my private office. It was the largest private office in the Cabinet Office bar the boss, and 6 of them chasing all the time, chasing, to get the sort of things that you are suggesting needed to be done.
So in your view, that you call it machine, but that's civil servants trying to possibly hide the extent of mismanagement, mistakes.
It's a paranoid risk aversion combined with ignorance, lack of confidence. It's a whole mass of activity. The lack of the training of the civil servants, so they don't understand this stuff. And also, when you send out a blanket refusal like that, oh no, we're not going to publish these loans because it's confidential. That kind of, in some cases, it shuts it down. That's just, oh well, we better not force that one any harder. We better go off somewhere else. That's what happens. So you have to keep drilling the whole time, and it's jolly hard work. So, one day Mr. Jones will be a minister. He's 25 years younger than me, and you'll have the stamina to go at it better than I was able to.
I'll hand back to future minister.
Well, thank you for that. Well, our time has come to an end, Lord Agnew, so thank you for coming with your contributions. If you'd like to drop those documents to our clerks, we will take them from you.
You all do. And there's a copy of my letter to the Bayes machine, which they're currently trying to block on FOI, so you should have that letter.
I'd like that.
And you might then, when you read it today, and you might ask them why they won't release it, because there's no great shakes in there. Thank you very much.
Thank you. You pass the documents to our clerks. Thank you, Lord Agnew.
Thank you.
Yeah.
And we're now going to move on to panel 2 as well.
Who cares about taxpayers' money?
Where we will welcome Patrick McGee, who is the Chief Commercial Officer at the British Business Bank, and also Richard Bierman, who is the Managing Director for Small Business Lending at the British Business Bank. So please, good morning, welcome.
Thank you very much.
Difficult introduction for you guys. Why did the Minister not get an answer to his letter?
Well, simply the letter to the Chair wasn't received by the Chair, and indeed when Lord Agnew stood up on the 24th of January, when immediately I heard letter to the Chairman. I've never heard of a letter to the Chairman, and it hadn't been received, unfortunately.
Why was that?
It went to the through the screening system and then went there. So
Vanished.
Yeah, well, our Chairman has written back and said he didn't receive it. In terms of the letter to my team, we did speak to the Cabinet Office. We were getting ready to come to PAC in January. We were working through that, and we said we will respond in January in terms of the information and the data.
Was this a one-off mistake, or do letters from ministers often vanish?
That was a one-off mistake. I can't recall that happening before.
How much money has been granted in total by the banks with government guarantees?
In total, we're over 75 billion across all the schemes, in the region of 45 billion in startup loan or in the bounce back loans programme.
And how much of that money was used to refinance existing lending facilities from the banks?
We don't have a comprehensive number on that for bounce back because refinancing was permitted. So if someone had, credit card debt or other debt, they were allowed to use the bounce back loan to refinance that. Again, I know small businesses who had £30,000 of credit card debt were paying £3,000 in interest and taking £30,000 off, and that saved them £3,000 in the midst of that crisis. So we don't have a number on refinancing and bounce back. In C-bills and CL bills, there was a cap of 20%.
20%. So it was an active policy decision to allow companies to refinance other credit.
The rules of the scheme allowed for the money to be used for the economic benefits of the business. So refinancing, I think, was permitted, or indeed was permitted.
Was there a discussion about using it for refinancing existing lending?
Yes, of course. And Lord Agnew I'm going to struggle to defend the indefensible, and he may be unpersuadable, but sitting in front of you, you have 51 years plus of experience in investment and commercial banking. We're the government centre of expertise in terms of small business banking, how to work with the lenders. We had established the C-bills scheme, which has gone on to support 90,000 businesses with £24 billion of financing. We were asked with 11 days' notice, and there have been 2 NAO reports written around this. So we were asked to set up this scheme with 11 days' notice. We discussed all those policy aspects with the Treasury and with Bayes. We worked very hard with the lenders, and again, Lord Agnew seemed to have some confusion in terms of whether or not those minimum checks were there. We absolutely are very, my memoirs will be interesting if I ever choose to write them. maybe many won't read them, but we sat down with those lenders over that first weekend and said, you've got to get the AML, KYC and fraud checks in. And those fraud checks that we agreed for them to put in helped save the taxpayer £2.2 billion in fraud that they've prevented through putting those minimum fraud checks. And I think you responded to the parliamentary question by your colleague, Mr. McConnell. So we absolutely, stepped in and discussed all those policy angles with Treasury in an 11-day window. It's on the record that we had reservations about the scheme. We knew that there would be high residual fraud risk, there would be value for money. But we shared those concerns with our ministers. But then we received a ministerial direction to go ahead. But I'm not here to say, well, we raised our reservations. We raised those reservations, and every day since then, and particularly in those first 11 days, we did everything in our part to mitigate those risks.
I'll come back to the reservation notice. Why was the decision to put a 20% cap on the CBILS and CWIL loans for refinancing applied, but not to the bounce back loans?
So bounce back was, if you recall, and I think some of you may have been in some of the APPGs in April and May 2020 that I appeared in, there was a huge concern. The CBILS process was basically turning out to be a 4 to 6 week process, and the money wasn't getting out.
And my question wasn't not about timescales, it was about why was there not a restriction on refinancing on bounce back loans compared to the other products?
Sorry, to be crisp, CBILS wasn't working fast enough, and the decision was to get money there for the economic benefit of the business.
A conditionality on whether you can use it for refinancing or not isn't going to change the speed of delivery of money, just a condition that what you can and can't use it for.
But then the banks would have to set up a monitoring system that would have to track that, etc.
Okay, and did this go to ministerial level to sign off, or was this decided in the British Business Bank?
Oh, all these policy decisions and these design decisions are all ministerial decisions.
A's or Treasury?
Both. I think there was ministerial letters between the two departments.
And Lord Agnew talked about the data dashboard and various items of data that he'd requested when he was a minister from the British Business Bank. Do you not have it?
Do you want me to jump in? So we have huge amount of data.
Why don't you publish it?
So we share through a number of forums. So we have but particularly a counter fraud forum that Cabinet Office are members of, as our Treasury.
The minister was the counter fraud minister in the Cabinet Office, and he said he didn't get the data.
I can't speak for whether he was past that data, but we share that data through a fraud dashboard that we provide, and we share, and also we work very closely with the Cabinet Office to produce other data.
So are you saying that the minister was incorrect, the former minister was incorrect, when he said, as a Cabinet Office minister for responsibility for anti-fraud and corruption, that when he asked for data and didn't get it, he wasn't looking in the right place?
I can't say what he was provided, but all I was going to say is we provide a fraud dashboard that has a lot of data on fraud and a lot of data on the lender performance, and that's provided.
We see it, yeah.
We've consolidated that now into a lender dashboard and added to that, and that was produced and shared with.
Can we have a copy of that?
I've no doubt you can be provided a copy of that. That's for ministerial. That's for ministerial access.
I think the answer is yes, and we'll be delighted to look at it. Nurse, you wanted to come in briefly.
I think it's really important, Richard, that we get this absolutely accurate. We were just given evidence that no dashboard was made available. No, let me finish. So you're now saying there is information available. Are you now talking to me saying that there is information or there is a dashboard? Because we don't want to be contempt of the committee. Who is telling the truth?
So, I don't think it's a question. So there is what I'm saying is there's data provided.
What data are you providing that he's looking for that he's not getting?
So we provide data on the lender performance. Mm-hmm. We provide data on the information on where there's arrears, where there's defaults. We provide information on. We work closely with the Cabinet Office and their data analytics program, and they also feed into this forum on data on particular areas of fraud risks. Now, when it comes to the lender dashboard, if I could just for a moment explain, what we've done subsequently to Lord Agnew's letter is we're combining that data into one dashboard and adding additional data points.
You're combining, so it hasn't yet been combined on a dashboard.
There's data provided in two dashboards. We're combining it into one and adding additional data points to that submission to the regular
forum. When
forum.
he wrote in and asked for a dashboard, is that information available right now in the format that he asks for?
It's available in a different dashboard, but the information is available.
Not in the format that he's asking for. You're not able to provide the information that he's asking for.
may I come in? As Richard said, there were two sets of dashboards. Counter Fraud Office or from Cabinet Office were involved in the Counter Fraud Strategy Board. We worked with Cabinet Office officials from the 6th of May 2020, so this idea that we weren't involved. So there was a dashboard on fraud statistics that was shared frequently during 2021, and his colleagues had access to that, and he had access to that. And again, he's cited some of those statistics. We're also doing lender performance dashboard, and we work with the overall performance of the scheme is managed by Bays and Treasury, so we were sharing that dashboard. He wanted us to combine the two. It has been combined with two and has been shared on the Counter Fraud Strategy Board on the 7th of March. So there's two dashboards and he wanted them combined.
How is it so complicated?
I don't know.
No, but it's your responsibility to make the information coming forward, but you're making it so complicated. If you have the data, just hand it over to the minister whilst he's a minister, or hand it over to him whilst he's no longer a minister. Why is it so complicated?
I don't think it's that complicated, and I think this whole dashboard issue is a bigger issue than
Can I just check on the chronology, because maybe this is the issue. When did you start working on the dashboards?
We've been working on the dashboards throughout the scheme, so we've published public data.
The very start?
Yes, so you know, in the early stages you're talking about deployment. In the first year you don't have arrears or defaults because it was an interest-free and payment-free period, so you don't really have performance data in the first year. So then when you get into June 2021, you then start looking at lender performance. And then we started to provide dashboards. So the governance within the BBB is much better than Lord Agnew would have you believe. You know, and there's many things I would agree with him around. You know, I think fraud is a huge issue. We need to challenge the lenders. We need to track the data. We are doing that. So we've been tracking that data. We've been challenging it in portfolio reviews. We've been sharing it back with the banks and challenging the banks. Have they been doing the right things and are they following the scheme rules? So to say that there isn't a plan, I sort of don't agree with. I think we have been taking very active steps with the lenders to absolutely minimise that risk.
Thank you. Just the last question before I call in colleagues. The British Business Bank issued a reservation notice, which is the same as requesting a ministerial direction. Was that because the British Business Bank felt like it couldn't cope with the scale of what it was being asked to do?
No, the three areas that we raised it on were value for money, you know, with the losses, how would they be compared to the benefits to the economy. I think longer term, I think we'll all realise that the scheme saved hundreds of thousands of businesses, but we raised a value for money concern. We raised a propriety concern about the potential residual fraud risk, and we raised a feasibility risk, but that was whether or not the banks could actually mobilise the scheme in 11 days, developing a completely new product and putting it to market. I was very concerned in the first week or two that the whole banking system, they wouldn't be able to get these bounce-back loans out, and this desire to get money quickly through the banking system to SMEs would fail. So that was the concern. Now, absolutely, I would agree with you. In those early days, it was a challenge. We had launched C-bills, we had launched CL bills. The call came in to do this. I have another team that works on EFG and C-bills, and they were extremely busy delivering those. Richard, having worked in the banking sector for 20 years, joined me 2-3 years ago. He runs the Startup Loans Programme, which lends businesses, money to businesses, entrepreneurs who want to start businesses, and you know there's many similarities there. The Cabinet Office have come in and looked at the Startup Loans Programme and given us a gold award for counter fraud a few years back. So I was very lucky to have Richard in hand, so I asked Richard to focus on the bounce back scheme.
What I don't entirely understand is why the Treasury just didn't work directly with the banks.
They were working directly with the banks through us, so you know through those 11.
But why through the British? I don't understand why the Chancellor announced that he was going to do something. He then had to pass it to Bays, who passed it to the British Business Bank, who passed it to the banks. Why didn't the Treasury just work with the banks to get the money out?
Without blowing our own trumpet, we are the centre of expertise. We've run these programmes. We've been running the EFG programme. I have staff within the bank who worked on the launch of EFG in 2009. So we have the skills, the operations, the experience of working with the banks to deliver these. So, frankly, I was pleased that the bank existed. You know, I've worked in government for 10 years, and when 10 years ago the government didn't have a development bank, and my job was to set up the British Business Bank, and I've been delighted to set up and run it. And I think if government hadn't had the British Business Bank to run these schemes, the economy would have been in a worse place. So that's why we were called to arms.
Thank you. Alan Brown, please.
Thanks, Chair. So just to stick to the concerns you had, so you highlighted you had concerns about fraud and you put that as a risk to ministers. Was there any specific areas of fraud concern that you highlighted that changes were made to counteract that, or were all your concerns ignored? And is the level of fraud then that's subsequently been realised, is that level of fraud that you're concerned about, or is it better or worse than what you anticipated?
Well, very good question. So we obviously had concerns, and fraud comes in many different forms. You can have duplicate fraud, you can have data of incorporation fraud, you can have first-party, third-party fraud, etc. So we had a range of concerns. As Lord Agnew highlighted, we did bring in a private sector consultant who works with the financial services industry. We looked at the fraud standards and the procedures that the banks could put in place. So we got the banks to implement those procedures, and I've cited those earlier. So those recommendations were taken on board where possible, and then we went on to take further steps, including putting in a duplicate check, putting in date of incorporation flags, putting in a change of director flags, and then sharing that data back with the banks. So in the very early days, our initial estimates would have been that fraud could have been 10 to 20%, and that's what we were thinking at the time of our reservation notice. In the Bay's annual report and accounts, we did a very detailed fraud sampling exercise, which we again worked very closely with Cabinet Office on. That came out with a central estimate of 11.15%. That has been subsequently revised, and much further deeper work has gone on to those cases, and that estimate is now 7.5%. So the level of fraud is going down, but it's still much higher than you or I or anyone else would be comfortable with.
And why is that estimate of fraud levels, why is it going down? What work's been done? Is this because of recovery, or is this just because you're saying, well, actually now we've done more checks and we don't think that element was fraud?
I think it's the latter. It's as we get to understand the scheme more, we can explore more data, and also that consultancy, they continue to work and continue to dig into the data, and also spend time working with the lenders to understand what the lenders are seeing. So essentially, it's just getting further detail. I think it's very fair to say that it's still very uncertain. You know, there's still lots to happen over this scheme over the coming months and years. So there's areas that we need to continue to dig into, and I would expect that 7.5, our estimate, to change in the future. But essentially, it is that latter point.
And now, our briefing for this, it was estimated £47 billion of loans went out under bounce back, but B's estimate 17 billion, so well over a third of that won't come back, and within that there's a £5 billion fraud element. Is that figures you would agree with?
I think that's from their accounts. So the revised figures, Patrick just explained, the 7.5 bring that fraud estimate down to 3.5. So that's
even if there's less fraud, does that mean the taxpayers get more money back? Or is it just money that's going to be lost? It's not paid back, it's not fraud, but it's still just lost anyway? It's
bringing down the total amount of loss.
Right.
So that our latest estimates see it coming down. I mean, it's still a huge figure, so don't get me wrong. It's not something that doesn't make me sort of frustrated and angry, but the figures are coming down in the most latest estimates.
And Lord Agnew is very big on the fact that the government should be reporting what businesses got how much and shouldn't hide behind commercial sensitivity or anything. Thinks that helps shine a spotlight on that and maybe allow further work to be done in terms of fraud. Do you think it should, that information should be published what companies access money?
I think it's a decision that needs to be agreed across sort of with Bays. But I think the other sort of considerations.
Well, do you think the commercial sensitivity argument holds up?
I think there's some couple of other considerations in there that I think are important. Not just the commercial sensitivities of the lenders, but if we're talking about individual businesses, it's the potential commercial sensitivities of those businesses themselves. I think there's also a risk. There is a risk of creating potential sort of scamming fraud of the businesses if people become aware of what they've got. But I think it is a decision that will have to be taken with
why would that create a scamming fraud just by publishing data?
Sorry?
Why would that create a potential scamming fraud if you just publish data in terms of what companies receive?
It's a small point, but I think if someone was aware that a certain business had taken a loan and had an engagement with us or others, then that gives the opportunity for someone to sort of feed into them and effectively sort of third-party fraud take over and pretend to be someone that needs to collect, put pressure on them, that kind of thing. So it's a small point. I wouldn't get
to be honest, I can't follow that.
Caught up on that.
I mean, that really shouldn't be a reason for not publishing the data, should it?
Well, I think it's a consideration. I think,
but not a reason not to publish. Whose decision is that? Is it yours or the Minister's?
I think ultimately it's a ministerial decision.
So, Chair, we're discussing data publication strategy with colleagues across government. And again, there's two types of data. There's the lender, there's overall scheme performance data, which we've been publishing. Then there's lender by lender data, performance of the lenders, and then there's the individual, local plumber, etc., who could be subject to being approached. So there's those elements, and we're discussing that. Under the state aid laws that apply, there is disclosure above a certain threshold in CBILS.
When will the decision be taken whether to publish or not?
We've been discussing that over recent months with colleagues across government. The plan
I'm asking when.
The plan was to publish next set of data in May based on the March year-end
That's
figures.
the individual data about which companies receive what.
The overall publication strategy we're working on.
We've got lots of questions for you, and I'm conscious of time, so we're going to need to keep the pace up a bit, if that's okay. So direct answers where at all possible. Nusrat Ghani, please.
We don't know what the data is, as Lord Agnew said, but there's possibly a loss of £4.9 billion through fraud.
That would be based on the 11.15, based on the 7.5 that drops below 3.5 and 4.
Actually, you've said 3 times that the bank is either a centre of expertise or a centre of excellence. I think there's a level of arrogance here. Do you still think you're a centre of expertise and excellence, knowing how much money's been lost?
Well, what I would say to you is it's one of our objectives set by government to be this government centre of expertise.
Oh, so it's an objective.
It's one of our 6 objectives.
But you are. You said you are the centre of excellence and a centre of expertise, but you've lost quite a bit of money.
Well, the policy design here was to get that money out to support businesses in the wider economic interest. So having made our concerns known, it was our job to be experts and to deliver that scheme. And, to scale our systems that used to manage the data on 2,000 loans to manage it in 1.6 million. So we brought a lot of operational know-how to the table. We brought a lot of expertise. So I'm sorry if I've sounded a little proud. I'm obviously taking quite a bit of...
I just want to know, how much level of fraud can you accept while still continuing to be a centre of expertise and centre of excellence?
Well, we knew from the first day, the 22nd of April, when we were told about it, that this would be subject to fraud because the number of checks would be less. So we made those... we've actually, in our own risk appetite statements, and the board who manages in an appropriate financial institution type way, we have carved that out because that was ministerially directed to take that risk.
Thank you.
Thank you. Antonia, please.
Thank you, Chair. Question for both of you, basically. How has administering these loans affected your workload?
Yes, we've been extremely busy, and again, I apologise if I've been a little defensive, because I think the way the teams across the bank stood up to deliver these schemes, so we have had to scale the bank, we've had to outsource a lot of activities, so I think Lord Agnew said at one point we should wake up. We hardly didn't sleep for the first couple of months because we had so much work to do. So it's been a huge challenge, but the team have risen to it.
And Richard, you said there's still lots to happen, and Lord Agnew said we have got to try and save some money now. And I just, want to know, have you got sufficient capacity now to monitor and risk assess outstanding loan balances and take action where there are indications of fraud? Because there's still a lot to be done.
As Patrick said, in the early days it was very, very challenging, but we have built out our team. So we've now got a bounce back loan team in place, and we're building and expanding a fraud and financial crime team in the bank. So we've got lots more resource now to do that. I think the key for us over the coming months and years is continuing that engagement with the lenders, and making sure that we're using the data that we've got and working closely, as we have done throughout with the Cabinet Office, to take that data and to make sure that we're feeding that into the lenders to allow them to take action where necessary, and if appropriate, challenging the lenders if there's an issue. But I think we've got good resource now. Early days it was very challenging.
Are you going to try and save some money now?
Absolutely. I can't. It's been 2 years of real focus and dedication to this, and I'm as angry as Lord Agnew about the fraud. It's not. I'm not sitting here in any way sort of thinking it's a good outcome that any fraud takes place. So, of course, I'm dedicated to keep pushing on this and keep working with the lenders and keep working within the realms of the scheme and thinking around what else we can do. And if I just take a step back, I think one of the things that has been positive is how we have worked with across government, with BEIS, with Treasury, and particularly with Cabinet Office. And I think one of my worries with some of this is that I don't want to wedge between us and the Cabinet Office, because their counter-fraud function team has been really important to us, and they've done really good work with us, and I hope we'll continue to do that over the coming months and years.
Thank you.
Mark Pawsey, please.
Thank you, Chairman. Mr McGee, Lord Agnew's made some very serious charges about the bank. Why isn't the Chairman here to defend what the bank has been doing?
I don't think there was a request for the Chair to attend. We've responded to the request, and I'm sure the Chair would...
Wouldn't he want, as the figurehead, the leader of the organisation, to have been in your seat justifying what's happened over the past 2 years?
Well, in government terms, I was the senior responsible officer on the front line. If from the Chair's position he wants to give his views, I'm sure he can do that.
Could I ask you, before getting involved in the COVID loan schemes, what was the level of activity of the British Business Bank?
So at the time of COVID, we had supported around 100,000 businesses with about £8 billion worth of finance under our scheme.
Post-COVID?
We're now at 1.6 billion, so a scaling of 16 times the number of businesses.
But we've heard Mr Beerman say you had to outsource some activities. You're building up a team. You're building and expanding the team. You've got more reserve now, in the sense that you didn't have that previously. Isn't the truth of the matter that you are frankly out of your depth?
I wouldn't recognise that. I think we were given a huge challenge, and we've risen to that challenge.
But it was a massive challenge that you weren't equipped to do at the time.
We always had plans in place to take the enterprise finance guarantee and widen it, so that's what happened with CBILS, taking one step further and taking the guarantee.
Wouldn't it have been more honest for you to say, yeah, we'd love to do this job, but we're really not equipped to do it?
Well, and what would have been the counterfactual then? Money wouldn't have got to small businesses.
Government might have gone direct to the high street banks and managed, would have had to design an alternative scheme.
We had the guarantee, we had the operations, the systems, the legal agreements, the relationships, the accreditations. So I think government would have been in a much worse position.
And isn't part of the problem that you're not regulated in the way that banks are more broadly? Should you be regulated in the same way as our high street banks?
I think that's again a slight misperception. If I over-summarise why the PRA is there, it's prudential regulation to make sure depositors' savings are safe. We don't take deposits. The Financial Conduct Authority is there to make sure that customers are treated fairly. We don't deal directly with SMEs, the banks do that. So the regulation, and we do work very closely with the FCA, and we talk very closely to them about this scheme. So again, we're an economic development bank, we're not a high street bank.
We should be regulating you to make sure that you protect taxpayers' money.
I think Lord Agnew said that, our board, and again I'm sure our chair would give it a robust defence, as would I, of the work of the board, who are filled with financial services experts. And then we have UKGI, Government Investments, who sit on our board and manage our governance, and we frequently, daily discussions with BEIS and HMT.
Thank you. Alan Brown, please.
I do need to come back in, Chair.
Thank you. Richard Fuller.
Thank you, Chairman. You're taking a lot of incoming today, and I think it's just fair to put on the record that there are thousands of businesses across this country who benefit and are still in business because of the work that you and your colleagues put in. So we do appreciate that, but you're aware, of course, the focus here is on the other aspects. But I just want to put on the record. Just to return to the point that Mr. Pawsey, my colleague, mentioned. Lord Agnew had mentioned you had two personnel with relevant anti-fraud experience when this started. Did you look at that at the time and think we're just way under-resourced in this area?
It was actually BEIS who had two people who did counter-fraud. We have a range of people across the bank who would have had significant fraud, financial crime experience. Richard had run large elements of a high street bank. With people within the startup loans area, so we didn't have a dedicated team, but we had various people across the bank.
At no point, it was no point did you think we are under-resourced for this challenge?
Of course, in those early days, we knew there was a huge mountain decline, but it was the middle of a pandemic.
And did you make I appreciate that you'd want to do your bit, but did you make representations to say we do not have the resources, we need more resources?
From the outset, we were saying, yes, we're going to need to build and scale, and we're going to have to build things up.
If I may, so at the initial point, because of that lack of resource to really drive this through, that's where we engaged sort of external consultants. So we worked with a consultancy that was specialised in fraud from financial services. So we brought them in while we built up our own resourcing.
I think Lord Agnew referred to that, didn't he, earlier on? And he implied that the recommendations from the consultant weren't implemented. Is that correct?
So it was actually a big more than just one. There was a team of consultants. So the report that they provided actually sort of laid the basis for a lot of the work that was undertaken. So things like the duplicate fraud check was brought in on the back of that report. So I think that's...
You've talked about multiple, but that consultant. So there clearly was one consultant report that was quite seminal on this issue. That would have gone to your board. Did your board accept that consultant's report, and did they implement the recommendations in full?
I have to say, I'm not sure which particular report he's referring to. Okay.
Sorry. You can follow up with the chairman in due course, Chairman. Can I just ask, Lord Agnew in the House of Lords gave 3 statistics that are relevant, but he didn't put the scale of those statistics. So Lord Agnew said that 3 out of 7 of the main lenders account for 80% of loans that were given to companies that already dissolved, and that 2 out of 7 main lenders account for 81% of loans to companies that were incorporated post-COVID, and that 1 out of 7 of the main lenders accounted for 38% of duplicate BBL applications. But there's no scale of how many companies that were already dissolved received loans, or how many companies that were incorporated post-COVID received loans, or how many duplicate BBL application companies there were, and what the scale of the loans were provided. Are you able to provide us with the information from the missing information on each of those?
Happy to do that either in writing or now, but in terms of companies already dissolved, it was in the region of 1,000 companies, and that was because Companies House had, a major contributor to that was that Companies House had suspended various procedures. In terms of the duplicate loans, again, we're doing work around that. In the fraud sampling exercise I talked about, that was about 4.5% of the book looked to be duplicates. We've been doing detailed work across our the 1.5 million loans. At this stage, we've identified 22,000 loans, which look, that they're very closely matched, but we're looking at a much wider population. So the 22,000 is a 1.5%. So I think that number will probably go up. And Richard, do you have the numbers in terms of the corporation?
About 1,500.
1,500 companies incorporated. Do you have the amount of pounds sterling that was lent into each of those groups? Can you provide that to the committee?
I'm sure we can.
And my final question, Chair. Given that 3 out of 7, big proportion, 2 out of 7, big proportion, 1 out of 7, big proportion, what in your mind, Mr. McGee, Mr. Bowen, accounts for that difference between banks?
I think as we've looked at it, it's not just that. As we looked at it, there's different areas and with different banks where operationally, particularly in the early days, they had some challenges as well. So I think the scheme was put together, as we said, in 11 days, put together very quickly, but the lenders also had to operationalise it quickly. So I think what we've got is you've got concentrations of risk that's come through different lenders in different ways. So I think it's fundamentally operational issues that they may well have had, such as companies formed after the 1st of March. We haven't been just sort of sitting on that. We've been engaging the lenders about that. So we've been sort of challenging them, talking to them about that, sort of asking them for their effectively them to report back. And what we've been seeing is the lenders sort of, where there has been errors, where there have been flaws, they've been removing guarantees from cover and effectively taking responsibility for those areas and self-correcting. So fundamentally, were errors made? Yeah, I think they were, but I think the lenders are responding well to the challenge, and where they're acknowledging errors and actually self-reporting as well, coming to us and saying, we found another error here, please remove these cases from cover, they're doing so.
Thank you. Which consultancy provided the anti-fraud advice?
PwC.
And there presumably was a write-up of their recommendations.
Yes.
Could you send that to us?
We can, yeah.
And ideally with a list of what you accepted and what you didn't accept. That would be helpful. Thank you. Andy MacDonald, please.
Very briefly, just on the issue of transparency, Chair, I was going to ask that very question, but we heard an account from Lord Agnew that was wholly different from your description of the positive relationship between Cabinet Office counter-fraud people and yourselves. How can it possibly be that is such a diametrically opposed account of what has happened here? And as Mr. Fuller's pointed out, everybody is absolutely delighted that we were able to get money out to businesses to save those good businesses and keep people employed. That's not the issue. But the issue of transparency is we do need to know who got what and where, because there'll be other businesses, competitors who did it right, people who did it fraudulently, and they don't know the difference between the two. If Switzerland and other countries are doing it, why don't we have a more transparent and open system here? And why on earth is it that a government minister, we are used as backbench members of parliament to the runaround, to the non-answers, but for a government minister not to get the information that he is asked for, isn't that an incredible indictment? And how can you correct that position if it lies at your door?
Yeah, so I have to say, the Cabinet Office have been, like I said earlier, I think they've been hugely useful and important to us. So we were working with the Cabinet Office. I was engaged with the Cabinet Office the week the scheme launched. They've been coming to our lender forums that we hold. So we hold lender forums right from the first week of the launch, where we get to go with the lenders to talk around consistency, talk around the risks, etc., etc. Cabinet Office have a place there, and their data analytics programme has been hugely helpful.
When Lord Agnew says he's not getting a response to the reasonable requests he's making, that's somehow not accurate. Why is a government minister not getting answers?
As I was saying earlier, he had full access to the counter-fraud data. There was a performance dashboard that was being shared, and we've merged the two together, and it's been shared with his department. But I absolutely regret that he didn't get it. Now, as I said to him, I spent half an hour discussing with him in his 2-year tenure, and I think, and I actually had a very good discussion with him. I thought, this gentleman is very, and I totally agree with him, fraud's a very significant issue. At the end of that conversation on the 18th of November, I said, look, I absolutely want to take action again with on the lenders here. We want to challenge them, and very much welcome your participation. And if you need to come with me to the lenders in the future, that's fine.
If I may, just for transparency, just to be clear, on the letter that was sent in December, there were some additional asks. So we put those additional asks in and added those to the new lender dashboard, which was provided last month. So did we capture everything he wanted? Obviously not. But have we responded to that letter? Yes, and we've added those additional asks.
Very quick follow-up from Charlotte Nichols.
So your suggestion seems to be that if the Cabinet Office were involved in all of these discussions the whole time, that Lord Agnew was in fact getting the data that he'd asked for, that based on his earlier testimony, your assessment of things seems to be that the issue is incompetency within the Cabinet Office, not incompetency within the British Business Bank.
No, I'm not. We're certainly not saying that. And as Richard said, we've worked very constructively with Cabinet Office officials. Again, they've challenged us to do more, and we've risen to that. We've dug into that data, shared that data. So he wanted the data at the next level and consolidating two dashboards. So I'm not saying there was any incompetence. I really do welcome the work that we've done with Cabinet Office. What Lord Agnew was saying in terms of the data analytics has absolutely helped us, and they've absolutely come in and been very helpful. So I'm saying that it's been a very collaborative issue there. Lord Agnew seems very frustrated about the dashboards. I apologise about that, but we had two dashboards he wanted to bring together.
And just to reiterate, what I think from the letter that in December, Lord Agnew say there's more information that he wants over and above what's already provided. Now, whether he was receiving that or not, I don't know, but he was asking for more information, and that's what we've subsequently added over the last 2 months.
When you say whether he was receiving it or not, you're saying that the information had been sent and he's just somehow not received it.
I don't know. I don't know. All I'm saying is that we have a sort of bi-weekly counter-fraud forum with Bayes, Treasury and Cabinet Office, and we provide data into that on lender performance, and we work with Cabinet Office and they provide data into that on frauds. If that wasn't sufficient, as I say, and more, there was a request for more, which we've acted upon, but I just thought it's important to clarify that data is provided. We do provide data into that environment. Did I send that personally onto Lord Agnew? No, I didn't. We submitted that through the counter-fraud forum that we have in place. And as I say, when asked for additional data points, we've subsequently provided them over the last 2 months.
A taxonomy that I've used with the team for most of the last 2 years is data is great, and we have huge amounts of data. We've 70 data points on each of 1.6 million facilities. Insight's much better, and then that drives action. And again, through that work we've done with Cabinet Office, we've been getting good insight. We've been sharing it back to the banks, and they've been taking that action. So this concept that we're, not taking action, I don't recognise.
Okay, and joining us from the Treasury Select Committee, Siobhan McDonough.
In answer to a member's question, you said that you weren't regulated other than by your board. Don't you think you would have benefited from an independent regulator watching what you were doing and supporting you?
As I say, the regulatory formats in the UK are set up to manage, prudentially, banks that are taking deposits. We don't take deposits. FCA is managing conduct. So again, I don't think the rules that PRA and FCA write and monitor would be applicable to us. I worked on the setup of the bank 10 years ago and we discussed whether or not to be regulated, and we even discussed, I have a letter from the FCA that basically says, you're an economic development bank, not a retail bank, we don't want to or should regulate you.
Is there a need for another form of regulation? Can you rely on just on your board? You know how it is when you get on a board, you become committed to an organisation and probably don't provide the level of independent scrutiny that's required?
So I said it as an executive director on that board. If you look through the history, quite a few directors have joined the board in the last couple of years. They do provide that insight and challenge, and I would certainly say that our independent directors do provide that independent challenge.
And looking back, did you have the capacity, the staffing, the knowledge and expertise not only to administer COVID loans but to minimise the risk of fraud and loss associated with them that we've been discussing this morning? Or is Lord Agnew just living in a complete fantasy world?
As I've said, it was a huge challenge. We had to rise to that challenge. Again, if you look at the second NAO report, when we were doing our estimations in mid-2020 as to how much it would cost to administer those loan schemes over the business plan and spending review period, we were talking about £80 million. Government had supported us for that. By the time we did our 2021 business plan, those costs had risen to the region of £130 million and Treasury supported. So did we have that £130 million sitting on our balance sheet and those teams ready to go? No. Have we been supported to build out those teams? Absolutely.
Thank you. On the Treasury Select Committee, we've done an investigation into Greensill. Mm-hmm. And it threw up to some of us suggestions that the Treasury, after the numerous texts, emails, meetings of the former Prime Minister David Cameron with both Treasury officials and ministers, that they threw Greensill to you and that you gave them loan guarantees at the same time as they were being investigated by the PRA and the Serious Fraud Office. Do you think that makes you look a bit stupid?
No, I don't, and I think, again, there was an NAO report in a PIC hearing at which I appeared. I think that some of those regulatory investigations came after.
Some of them came at the same time.
I think the ones that were before were the ones in respect of the bank that JFG owned, and that wasn't shared with us, I agree. Yeah.
And in retrospect, would you have really given 500 million of loan guarantees if you knew that those investigations were going ahead?
Again, if you factor different information into a different circumstance, you may well come to a different outcome.
So would you feel a bit cross with the civil servants at the Treasury that they allowed you to do that?
So one of the key recommendations and findings from the NAO and PIC was that we should review what can be shared amongst different government agencies, and I think at times there are useful insights that can come across, and I think some progress has been made in that.
And you've now withdrawn the loan guarantees. Don't you think some of the people who invested in the bank, bought stuff from the bank, are going to come back to you because they did it at a time when they were led to believe that those guarantees were there? Well, indeed, they were there. So you've retrospectively done that. Well, don't you think you're going to end up in the courts?
In any insolvency situation which Greensill is in, there's always a litigation risk, so that's why we've been very carefully walking through that procedure. Technically we've suspended them and the investigation is still ongoing, and there's, as you say, information coming out. So there may well be litigation, but again, it's our job, as you've held us to account today, to preserve the taxpayer's purse and to decide whether or not those guarantees were used appropriately by Greensill. So we're very closely looking at that.
I mean, all of us as MPs, we fight over relatively small amounts of money for our constituents and for charities doing, really important work in our constituencies. Can you see how we might see the idea that you were allowed to give 500 million in loan guarantees to an organisation who were at the same time being investigated by the Serious Fraud Office?
Again, I want to go back through the chronology with you, perhaps offline, if that would be okay.
But if that happened, I'm confident it did happen, but I'm taking into account your suggestion that it wasn't at the same time. I'm fairly sure it was. How can that happen? I don't understand. How can somebody let you do that?
Look, if a criminal investigation, or I don't know if it's right to describe the SF probably as a criminal investigation, again, secrecy is important in preserving the powers. And again, we've all seen reports of SFO investigations falling over because the evidence and the procedure wasn't followed.
Somebody couldn't have phoned you and said, look, Pat, don't do that. I can't tell you why, but just don't do it.
Had I have received that call, I would have taken due account of it.
Okay, thank you very much. Thank you, Siobhan. That brings this panel to an end, so thank you for your contributions, Patrick McGee and Richard Bierman. We're now going to move on to our third and final panel, where we are welcoming Hannah Bernard from Barclays Bank, Carl Reid from HSBC, Jazz Singh from Lloyds Bank of Scotland, Andrew Harrison from NatWest RBS, and Susan Davies from Santander. We'll just let you all find your places and get comfortable. Sorry, I think we're just trying to find the last two witnesses. Oh, here we go, thank you. Great. Well, good morning and thank you to all of you for appearing this morning. I'm very conscious that there are 5 of you. There are a number of questions from colleagues and we are running against the clock. So could I encourage you please to give direct answers to the questions that you are asked and not read out pre-scripted comments that you might want to deliver. That would be very helpful to us. Firstly, I'm just going to ask a couple of direct questions to each of you. And again, if you give me direct answers, if you don't know, please say you don't know and that you'll write to me afterwards. I'll just go from left to right. I'll promise to go the other way next time. So Hannah Bernard, first of all, how much did your bank lend in total off the back of government guarantees through the 3 main schemes?
So if we do the bounce back loans first, that was 10.8 billion. And the other 2 I will have to give to you later.
Okay. And how much of that government-backed funding was used to refinance existing credit facilities at your bank?
So we believe that it was 1% of term lending would have been refinanced on the bounce back loan, and there'll be an amount of overdrafts that will have been repaid as well.
Thank you. And how much of the money went to companies that had been dissolved?
So we will have a very small proportion that will have subsequently filed a notice of dissolution back at Companies House. Yeah.
You had no companies that were actually already dissolved but were able to get access to financing?
Well, we've put in place lots of fraud measures. The latest information from the BBB has suggested that there are a small amounts that weren't in our marker set that we got through, and they may have subsequently put through notice of dissolution.
And did you have any duplicate applications?
We did. In the first, before we got the industry scheme up and running, we didn't have any that were duplicate within Barclays, but within the industry, we had about 1,500 that were duplicates.
Lord Agnew suggested that some banks had dropped their fraud markers, which apparently can be assessed in real time against company applications. Did your bank do that?
Well, we put in place a completely different system. So just to if you can bear with me, 2 things we did that were quite important, I think. The first one, we put the application form behind our firewall, so people had to be registered in online banking before they could access the application form. And the second one is we put lots of fraud markers on because we couldn't use our normal system. We had a different system, a different process. So we put markers on the customers, And then 60% of applications went straight through on the online process, and 40% went via a colleague. So we were very, I think, vigilant to try and make sure that where we needed to, we had an extra set of eyes on it.
And where you have accounts where it looks as if fraud has taken place, will you be recovering the funds using the Treasury guarantee or recovering the funds internally?
So we will be absolutely following the process that we've agreed to try and get that money back, working with law enforcement agencies and the industry and bodies that we've got. And if it subsequently transpires that we can't get that money back, then we will make claim on the guarantee.
Thank you. Now, everyone else knows the questions I'm about to ask you, so you've got an increasing amount of time to know the answers. Jazz Singh, same question. How much did your bank lend under the three schemes?
So approximately on bounce back loans is about 9.7 billion. It is a smaller number on the C-Build scheme.
And how much was used for refinancing credit facilities at your bank?
Incredibly small. Actually, the vast majority of businesses who took out bounce back loans had no previous history of borrowing with us.
No previous history of borrowing at all?
Yeah. So these are businesses who would have typically, in their typical course of running a business, may not have felt the need to borrow to grow the business, and they were, from what we saw, were predominantly borrowing in some sense as to pay for short-term wages or as a safety net.
Thank you. And did you end up lending any money to companies that had been dissolved?
So we, no businesses that were dissolved at the point. In fact, one of the things we had put as a check in our own journey was if any customer or any business was in financial difficulty pre the pandemic, we would make sure that we would stop their application before the bounce back loan even got processed.
And how many duplicate applications?
Again, incredibly small numbers actually. So we've, so since the industry-wide, so two things actually. Firstly, our own journey, the way we'd set it up, would check for any duplicate applications. So if they were a business and if you applied with us once, you could only go through the journey once. The second time you applied, it would stop right at the outset. And then secondly, when the industry-wide database was set up, which tracked for anyone who had a bounce back loan, say with some of the other banks, we've tracked that, but those numbers are really small.
And did you use your existing fraud markers, or did you set up a bespoke scheme?
We, across the board, we use our existing fraud markers. Our fraud markers check both the business that the business that's trading with us, and because one of the choices we made was we were only lending bounce back loans to businesses who had already got relationships with us. So we already had checks about their history. We could check where relevant what they were trading like in companies' house, etc. So we could continue to use our standard fraud markers.
And if presumably you can't recover funds from normal fraud schemes, you'll rely on the government guarantee.
Yeah, so we've done a few different things. One, wherever we have identified fraud, we have actually gone ahead and recovered the funds from those businesses, and there's a reasonable portion of places where we have been able to recover funds. Secondly, yes, we are working with Cabinet Office and with NATIS, etc., in terms of pursuing those businesses. And where we do end up in places where we don't think we can recover the funds, then we will rely on the guarantee.
Thank you. Carlery, total amount lent under the schemes?
On the bounce back loans, it was 7.2 billion, and I'd have to come back to you on the other schemes.
And how much used for refinancing at your bank?
On bounce back loans, it was actually very, very small. So as my colleague has said, actually in HSBC, very it was pretty much the companies who are borrowing actually have never borrowed before, so this is the first time they were entering into an agreement, so it's quite a small number.
Just to be clear, for witnesses that say very, very small, we will expect actual numbers, but we can do that in writing afterwards. Number of companies that have been dissolved that you lent money to?
For us, it was a very small number again, so and clearly we were working through the various activities to identify those.
Okay. Duplicate applications?
So we did receive a number of duplicate applications throughout the scheme, and of course we only lent to a single application in HSBC.
If you don't know the number, just say don't know, because I'll need to just move through quickly. And then fraud markers. Did you have a bespoke scheme, or did you use your existing fraud markers scheme?
We created a bespoke scheme, so it was completely different to our BAU lending, but we brought some of the activities that we would have done in our BAU lending, and before we dispersed funds, we did additional checks.
And presumably you'll rely on the Treasury guarantee if you can't recover fraudulent applications in the normal way?
After our collections and recoveries processes, yes.
Thank you. Susan Davies, amount lent from your bank, please?
Yeah, 3.9 billion under B-bills, and that was 252,000 companies, and 700 million under C-bills to about 2,000 companies.
Thank you. And how much used for refinancing?
A very small proportion. I don't have the number. Again, similar to my colleagues. over 71% of the applicants for BBLs had never borrowed before.
Okay. Dissolved companies that you lent to?
Again, I don't have the exact number, but a small proportion. We made the decision to only make BBLs available to our existing customers. So we had a degree of visibility on the customers, and if we saw anything that was untoward, then we could have put a stop on before paying out the funds.
Duplicate applications?
Similarly, I don't have the exact number, but again, we had that we had some visibility because they were existing customers.
And a bespoke fraud marker scheme or existing?
Existing fraud markers, because we were dealing with our existing customers, we maintained those fraud markers throughout the scheme.
Thank you. And presumably relying on the Treasury guarantee if you can't recover fraudulent funds?
Yes, I mean, so far we've stopped 85 million of loans being paid initially through the checks that we did, and since we've recovered around 20 million through the interventions and the actions through the data and insight that we've had, so we've been able to.
Thank you. Andrew Harrison, total amount lent?
Across all three, about 14 billion, and around about 9 of that was bounce back loans.
How much used for refinancing?
Not a figure that we've tracked, but similar to everybody else. Around about 70% were not borrowers pre obtaining the loan.
Any funds to companies that have been dissolved?
From the information that we've got so far, we believe it's about 100.
And duplicate applications?
It's a similar amount, so none within the bank, but with other lenders, around about 100 is our current view.
An existing or bespoke fraud marker scheme?
So we use our existing internal fraud markers. We do CIFAS checks, which is external. Plus, we were also running behind analytics through a couple of systems to check for fraud behaviours before any loan was drawn down.
And presumably relying on the Treasury guarantee for funds that can't be recovered?
If we followed the scheme rules, that would be the case, yes.
Okay. I mean, I know that all of you were asked to do a great deal of work very, very quickly, and you had very significant applications. But ultimately, this was quite a good deal, wasn't it? Because you can recover the funding from government if you need to, and you were able to refinance existing credit facilities. I don't think any of you gave me the answer specifically about how much was used for refinancing in your own bank. Is there a reason why you don't have that number today? Is it because you're not collecting the data, or just because you don't have it to hand today? Anyone want to? Are you collecting the data? I can go back through again, yes or no.
Well, it was within the scheme rules. The majority of the borrowers that came through were non-borrowers, previously, and it's quite hard, to track between actually what's gone onto a deposit account, what's gone to repay an overdraft, because obviously overdrafts might be drawn and repaid on a regular basis. So it's just not a figure that we've been monitoring.
Any other contributions on that?
Just, I guess, a couple of builds on that. One, so when the way the bounce back loans would have worked is someone would have got money into their business current account, and then it would have been very sensible in some cases for those businesses to use that money to pay off existing overdraft because they were trying to trade through a pretty critical period. So that would make complete sense. And in fact, I would have thought it wouldn't have been great from the scheme design perspective or from bank's perspective to stop customers from saying you actually got to not be able to use this money towards paying off overdrafts. Similarly, same thing applies, I guess, with any loans they might have, because they might have payments coming up to the loans in the next few months. So if they use that money to pay that off, that should be completely fine, I think, from a scheme design and from business outcome perspective. And I guess the second thing to think about is in the while there are different interest rates consumers pay or businesses pay for the loans that they've got, in a reasonable majority of cases, they would have been paying higher interest rates on other products. So in some sense, if you just think about it from a bank's incentive perspective, we would be, someone who's paying higher interest rate ends up paying lower interest rate. There wouldn't be any active intervention from us to say, yes, please, go ahead and do that.
Thank you. Charlotte Nichols, please.
Thank you, Chair. As experienced lenders, you would have had established means in place to give out loans to businesses, and obviously from what we've heard so far, many of you were only lending to existing businesses. Given this, how did you advise or make suggestions to the government on the way that the COVID business loans were set up? And do you think things could have been done better? And I will go from right to left this time, if that's okay.
So I think discussions, very constructive discussions were had with the British Business Bank, Treasury, and UK Finance, who was representing the lenders through that period of time. I guess discussions around I think open discussions around the balance of risks, around the desire to get money to businesses very, very quickly. And if you look at that point in time, I think many reports were saying that businesses had perhaps as little as 2 weeks of cash flow left, so there was a desire to do that. But I think as we've heard in previous evidence, I think a good understanding about some of the risks that were involved in terms of doing that. And from our position, from an institution, we very much made sure that we put in place the fraud protocols up front, to protect the taxpayer as much as possible, and indeed went in many ways beyond what we'd normally do with our traditional lending by putting many of those checks up front. So we actually screened hundreds of thousands of applications who didn't get through the front door because our checks stopped them. So I think we put appropriate checks in place to really protect the taxpayer through that very intensive period of time.
Thank you.
I'd just add to that, as lenders, I think we recognised very early on that the CBILS scheme wasn't going to be suitable or appropriate for many of the small businesses that really needed that lifeline. It was based, as many people know, on the old enterprise finance guarantee, and understandably it was a suitable mechanism for larger businesses, but you had to do the due diligence, and for many businesses who had never borrowed before, that just wasn't going to be a feasible option. So we, as lenders, were very vocal about that and worked collaboratively with the industry to find what was going to be a better and more suitable mechanism, and of course that was BBLS.
So again, speed, if we remember back to what was happening, the economy was shutting down, so we were working very closely with the Treasury and the British Business Bank in designing the scheme. We had a very, very short time to actually implement that, so I think that we need to be aware of the very, very tight timescales we had. We also did the necessary fraud checks. We also ensured that our internal fraud protocols were completely reviewed and understood. And we did stay open to new to bank, but for every onboarding we did, we ensured that we followed our business as usual onboarding checks, which included know your customer, anti-money laundering, and also credit checks before we progressed on to a bounce back loan.
Mr. Singh?
I won't repeat the points about speed and urgency because my colleagues have made that. I guess the couple of the bills I would say is, having been in some of those conversations right at the outset, I think the fact that we were talking about lending taxpayers' money wasn't lost on the participants, and I think there was active considerations from both, from ourselves, from other banks, and I felt, from British Business Bank and HMT to make sure we were doing everything we could to balance off the different competing priorities, which is how do we make sure businesses get money in the short term, how do we make sure taxpayers are protected, and hence while a lot of the thinking and execution was done at speed, I think there was lots of good engagement. I also think even right after the scheme was launched, scheme launched on the 4th of May, I think just a couple of days later, we got together on a call with UKF, UK Finance, British Business Bank, all the banks who were participating in the scheme, and even just 2 days later, we started to share what each one of us was seeing in terms of concerns or controls. And I think I felt, being in those conversations, we were being quite thoughtful about thinking about the implications, but also acting and intervening quickly enough.
Bernard, anything you want to add?
I would just say I think the speed and scale thing, it shouldn't be lost. And so if I just give the committee a kind of a fact, so within the first 4 weeks we lent 6 years worth of volume of lending, and I think that I hope puts into context this piece around, yes, I think we'd have loved to have had another 4 weeks, say, of preparation, but we would then have been slow getting the money to those hundreds of thousands of businesses that desperately needed it. And when you talk to businesses now about their pandemic experience, the bounce back loan was a lifeline for vast swathes of businesses. And
I don't think that any person on the committee is disputing that. I think the bit that we're trying to get to is really about what discussions were had with the government, how willing they were to take on board some of the suggestions, and if there were suggestions that they didn't take on board, whether that is perhaps something that has caused some of the fraud and loss that we're seeing. So I don't mean to cut across you there, but it's just, I'm just interested in hearing, were there things that were suggested that weren't taken up? Were there things that were said that weren't done? Or did the government, as, some of the other people on the panel have said, we're taking those things on board and we're having, quite an active, dynamic relationship with yourselves?
If I give you one example, I think, for example, the scheme necessitated a lot of self-attestation, so particularly the business's turnover. Ideally, we would have wanted an HMRC data feed, so we could have checked the turnover that they were stating. That wasn't available, and so that we made the suggestion it wasn't available, so we had to go with self-attestation.
Thank you for that.
Why isn't it available? Did they not provide it already? It was a bespoke new ask, was it?
Yeah, I don't believe it was available.
Actually, okay. Mark Pawsey, please.
Thank you, Chairman. I'm struggling a bit here, Chairman, because we heard from Lord Agnew about substantial levels of fraud. We've had an acknowledgement, I think, from British Business Bank that fraud has occurred, but we've got the representatives of 5 major banks here telling that they employed all of their usual checks and that there weren't any major levels of fraud. Who's right and who's wrong?
I think it's important to think about the different categories of fraud. So the first category, I think, is organised crime. The second category is around scheme abuse. So you've heard about the multiple bounce-back loans, that's scheme abuse. The third category is around self-attestation, and that's by far, when you hear these big numbers, it's the self-attestation piece that I think falls into that category of fraud. And I would say it doesn't necessarily mean that those people are not going to pay us back. So I think I do think it's important because the traditional fraud, I think, is still relatively low. I think it's the self-attestation piece that's the thing that potentially is much larger.
So as bankers, do you contest the levels of fraud that we've heard about in our evidence session previously from Lord Agnew and acknowledged in part by British Business Bank?
I think it's still really early days. I think we've seen relatively low levels of traditional fraud, and I think we're starting to see...
Struggling about with traditional fraud and other fraud. Fraud is fraud, isn't it? And this is people stealing money from the taxpayer.
If I just take the self-attestation piece, people will have made estimates about what they think their turnover was going to be. It doesn't necessarily mean they were intending to defraud, to not pay us back. Now, I completely accept, by the definition, if they've deliberately inflated their turnover, then that would be fraud, but they may still pay us back.
Your usual checks on a customer business stating what their turnover is, you would check that because you used to available at company's house. So how can you give all these loans to people who are making up figures about their turnover?
We weren't to do credit checks because we were trying to get the
but we've heard from, if I pick Susan Davis as an example, but we've heard from you that you put your usual checks in place.
We did, yes, and just building on my colleague's point, I mean, we did see, in our case in Santander, a relatively small amount, fraud less than 1%, and we've continued to see those levels throughout. Similar in terms of the experience of the types of fraud.
You didn't have to put all your usual checks in place. That was the purpose of the government scheme, was to get the money out of the door quickly. So I'm unsure why, as bankers, you're telling me we used our usual fraud checks to make certain these things didn't go wrong.
I think there is perhaps the design of the scheme was such that to accelerate the funding going to businesses, the businesses would self-attestate some things like turnover. I think the second element to it is that the banks were instructed not to undertake credit checks, to verify things like turnover, etc.
Anathema to your normal way of doing things, isn't it? You do them anyway.
But that would be that would delay the proceeds getting to businesses. So the desire, but where the banks were instructed was to undertake their normal fraud checks.
And in many cases, you've told us that in most cases you were lending to people who were already your customers, so you knew their history.
But so we knew their history, and we undertook the right level of checks to understand whether those individuals who were borrowing had behaviours that indicate that there was fraudulent activity in place. The areas that we were instructed not to undertake were the normal credit checks, because that would have precluded a large number of businesses probably getting access to those funds.
Can I just ask about how you got to understand the operation of the rules. Did you get emails on a regular basis from British Business Bank, or how did you know what the terms of these different deals were? Perhaps Mr. Reid, we haven't heard from you for a little while.
Absolutely. So obviously we have the lender's manual, which has the instructions.
Lender's manual.
The lender's manual.
Who prepares that?
That is from the British Business Bank.
That's from the British Business Bank.
Yep. And that outlines the guiding principles of the scheme, and we also have the guarantee that lists out the criteria.
The route of information dissemination may have come from Treasury or Government Department, but then to British Business Bank, and you as the lenders who are putting the money out into these businesses, your relationship was always with the British Business Bank.
That's correct. And obviously with our customers, because we were always servicing our customers.
But you weren't able to influence Treasury. You didn't have any discussions with Cabinet Office and with BEIS, because we know that these other departments. What happened there was irrelevant to you as banks, because you were told what to do by the British Business Bank.
Well, we were obviously in discussions as part of the industry forum, as my colleagues have said, with UK Finance, and we were engaged with the British Business Bank and HMT in the early days of the scheme, before the scheme was initiated.
Did you have any opportunity to influence the schemes on the basis of your experience of lending to businesses?
We provided our input into the various discussions, but ultimately, there was because of what was happening in the economy at the time, it was the speed. And I think the big differential, which my colleagues haven't discussed, is actually its affordability. So one of the big checks that we would do in our normal business as usual lending is an affordability check. We were not allowed to do that affordability check as part of the bounce back loan.
So say it again. So you weren't allowed to do that check. Not that you were discouraged to do it. You weren't allowed. But who wouldn't allow you to? British Business Bank.
The CBIL scheme, as we'd spoken about before, we had done all the necessary checks that would follow our business as usual, which included affordability checks. That would add several weeks onto a loan application.
Several weeks to that if the client's already known to you.
Because you still need to look at their business plan. So part of assessing any credit is assessing the customer's ability to pay in the future. So we would not just looking backwards, but also have a look forward.
Has to 8 weeks.
We work with our customers to assess each individual credit application, as we did with CBILs. Whereas in bounce back loans, again, as we were saying, the speed at which we need to get cash out to our customers was imperative. And in fact, just to give you an example of a customer, we have an independent clothing chain that were forced to close. Right? And they had 7 employees. We had to ensure that they could get the money to pay the employees, which was very important. And actually, one of the other suppliers they had to pay was HMRC. So it's helping customers like that to continue to be able to transact, pay their employees was very, very important.
I might ask Mr. Singh. Lord Agnew placed great store on the fact that some of these loans were being used to pay off other loans, credit card debt or whatever. You don't see any problem with that?
So, a couple of things. One, as I said earlier on, if the scheme was designed to make sure we were helping businesses trade through a very tough period, and if partly what those businesses or those business owners needed to do was to pay off an overdraft or to pay wages, I would have thought that's okay from a scheme.
Why do you think Lord Agnew thought that was the improper use of these loans?
I'm not sure I could speak for that. Yeah.
Right.
Thank you. Alan Brown, please.
Thanks. To Mr. Reid, please. So, Lord Agnew told the Treasury Committee on the 9th of March that HSBC had taken 4 months to put duplicate checks in place for businesses applying to the bounce back loan scheme. Is that 4-month estimate correct? And if so, what was the reasons for the delay?
So I think we need to go back again to what was happening at the time. At our peak, we had in excess of 30,000 applications a day coming into HSBC. We were there to try and service our customers as quickly as we possibly could, and therefore we were doing the necessary checks for onboarding of new customers. We actually brought the check in as soon as we possibly could.
How quick is this?
So
as soon as possible?
For new customers, we brought it in at the end of June, and then there was a delay in ensuring that we could roll it out to the wider population. At the time, there was a lot of pressure around ensuring that loans were being dispersed in 24 hours. That check.
And you said there was a delay. So for others, was that the full 4 months to implement the duplicate check?
We eventually went live with the full duplicate check on the 8th of December. However, we were providing data up to the CFAS fine check as of May. So we were uploading our data up into that facility.
Can I just ask quickly then how long it took each of the other banks to get their duplicate checks up and running?
By mid-July.
So how long was that?
6 weeks from starting.
6.
Very similar. So we were live. So the duplicate information was available from the last week of June-ish. We were ready by the last week of August. First week of August with our checks.
Similarly, we were early July, so it was set up at the end of June.
Yeah, we pretty much as soon as it came out, we implemented it. So a couple of weeks.
I guess back to you, Mr. Reid. So why was HSBC so far behind the other banks in completing that?
Like I said, we were trying to get the funds out to our customers as quickly as possible. We also maintained an open status for new customers, of which I'm proud to say we were able to open 71,000 new accounts, and we also. Can
I just ask then? Sorry, does that then mean other banks are at risk of exposure because HSBC were not doing the duplicate checks quick enough?
As I said, we uploaded all our information on all our applications up into CFAS Find check from the end of May. So the other institutions would have been able to see our information.
And the actual process of doing the checks yourselves, that still took longer for you to implement these checks?
We implemented checks as soon as it was operationally practical for us.
I'm confused about the 8th of December and doing it right away and information being available. Either the duplicate checks were getting done right away or they weren't. So was there a delay in the duplicate checks being undertaken in a certain cohort of loans that you were giving out?
As I previously said, for new-to-bank customers, we started those checks at the end of June, and we put the wider check in as soon as it was operationally practical for us.
That was just...
It was the 8th of December.
Right. That still seems a while to me. If we get sight of the fraud dashboard, is it likely to show HSBC then does have a bigger exposure? Or ultimately taxpayers get bigger exposure through HSBC as a consequence?
I don't have information on my other colleagues on what they are doing. However, we are working through that population, so we've seen customers have actually repaid their facilities, and we're working on work with each of the customers where we see a duplicate loan.
Just very quickly, if it's okay. So earlier on in the evidence, we had the representative from the British Business Bank saying they've revised estimates of fraud levels from 11% down to 7%. We can look at that as either good news or still really, really bad news. Could each of you just give me a figure what you think the fraud levels that your bank's been exposed to?
So in terms of the...
So just
because of time, just number or don't know,
yeah,
if that's all right.
Yeah.
Sorry, the reason why it's important is because it's as at today, what we've got in the portal versus what we think it relates to 7%. So as at today, we've got 1.5%, which includes traditional fraud and the self-attestation piece.
So we won't recognize the 7.5% number. We've got a much smaller number than that. We'd probably be in the 2 to 2.5% gap.
So currently it's 1.81%.
Less than 1%.
We think it's about 2, given the information we've currently got.
I think we might come back to that, but I'm going to get Alexander Stafford in first.
Yes, thank you. Obviously, given the liability for the losses actually sit within the government, how much effort have you guys actually gone into actually recovering any fraudulent money? Because surely you can just sit back and say, it's nothing to do with us. And you might keep saying small amounts, 1%, 2%, 3%. That's still a lot of money. And surely you have a responsibility to try and get that back. So what have you done? Have you gone back through the applications, really? Or how much work has each of your banks gone into actually trying to recover this money rather than just passing it off to the government? How many people work in the team looking at this, for instance?
I think there's an enormous effort that continues to be focused on recovering what is ultimately taxpayers' money. We've worked collaboratively across the industry. The information that we get from BIS in terms of where we have been able to identify potential fraudulent customers. We have teams, I know firsthand my teams are involved on a daily basis reviewing these cases, going out, contacting customers, following through these cases to conclusion. And whilst we recognise that no instance of fraud is acceptable, we have been able to recover nearly 20 million through the efforts of the teams that continue to focus on that activity to this day, and will continue until all money, or we have the opportunity to recover as much money as we can.
So you just on that, you mentioned enormous effort. That means nothing to me. I mean, I don't know what that means. Everyone's enormous effort. Have you gone back through all the applications to businesses, each one of them, to find out where the fraud is? How many people are working it? Because 20 or 30 million sounds like a lot of money, but there's a lot of money billions being sent out. That's 20 or 30 million of how many billion that you've lent out is not 1%. It's smaller than that. So how much effort actually have you and all your teams been doing to try and get this money back for the taxpayer?
Well, as I said, I think we have a concerted effort to...
Who's your team?
Well, we have a team of over 100 people that are focused, dedicated and focused on fraud activity. I mean, there's a much larger team behind that, but that's a team that will focus primarily on the data and the information that's provided to us.
100 people working on it. Sorry, do you mind sharing? And how many people did you have working on fraud prior to COVID?
Unfortunately, I don't have that number.
I mean, has your team increased? Because if you're giving out far more money, then surely the fraud team should increase to account for it, to find the fraud, or has it remained the same? And I'm going to ask everyone the question to see how big your fraud teams have increased. Has it remained the same, grown, shrunk? Do you have numbers?
Sorry. So, I mean, in terms of the energy and effort, so first of all, the vast majority of the fraud or potential fraud we think was stopped at the front door before it got through because of the checks. As I say, our current view of observed fraud is around about 2%. We've recovered through activity probably around about a third of that. And it's also important to say, of that 2%, we also have customers within that cohort who are actually still repaying. So it's suspected fraud, but not necessarily manifesting itself in losses. In terms of what we've done, similar to what Susan was saying, that we've put in place increased resources. We've probably got around about 100 additional people within our teams focusing on that. We've also invested in additional analytical tools that we've run right across our back book, to make sure that we're looking for triggers and behaviours that might indicate fraudulent activity, and where we do that, we're then following that up with the customer. We're also working very closely with the law enforcement agencies, the industry, Cabinet Office and others to follow up any suspicious activity that we've identified. I think off the back of that, we exited, I think, around about 260 businesses that were involved in organised crime, which was part of a wider exercise across the industry. So that it's a very significant activity that's underway.
Well, you haven't answered the question about has your fraud team increased?
Yes, by around about 100 people.
100 people.
We've increased our fraud operations team by 20%. And just to Andrew's point around the upfront controls, at its peak, we had an extra 900 people working on posting fraud markers.
So you say increased by 20% of your fraud team. Yet earlier on you mentioned that there were 6 times as many a year. You mentioned how many more loans there were, was it? Yes. 6 years worth. So should it be 6 years worth for fraud people investigating it to scale?
I suppose to Andrew's point, we'll have a lot of the fraud markers will have removed the volume was a lot of it was the electronic and physical application for the upfront. In terms of the number of cases we're now doing at the back end, that's where we've increased our fraud team.
Yes.
I think at its peaks, we had about 250 people working on fraud detection. It would have been about 100 doing similar activity in the past, before the pandemic. And the other thing to bear in mind, I guess, is a lot of fraud detection doesn't happen just with people, it happens with technology. So across all of us, there were lots of investment in the journey up front, but the ongoing monitoring.
So again, we have ongoing account and transaction monitoring, and if there are any triggers on the back of that, or if any of our staff see any unusual activity, we would raise an unusual activity report that would then be sent to the fraud operations team. And obviously, if there was any suspected serious fraud, then we would raise a suspicious activity report that would then go out to NATIS and other enforcement agencies. And we have increased our fraud team, and it's quite a dynamic, and it's something that I continuously look at. And if we need more, then I will bring in more people into my team to make sure that's covered.
Sure. Thank you. Richard Fuller, please.
Thank you, Chairman. In the interest of time, I'll ask specific questions to specific people, if I may. So, Mr. Harrison, how many bounce back loans did NatWest give out in total?
It's around about 300,000.
300,000. In response to the Chair's question about the number of duplicates, you said about 100 companies. And I was interested in that. It's always interesting looking at numbers, the difference about how you present things. So that was about 100 out of 300 is about 0.04%. So that's not a very large percentage. And similarly, I think from our, the information from the British Business Bank, there are 1,000 companies that dissolved, 1,000, 1,500 duplicates, and 1,500 who would dissolve, something like that, dissolved duplicates and incorporated post. So in total, that's sort of about 0.075%. Is that correct?
Based upon the information that we've got today, yes.
Sorry, I meant 0.175, just to get the maths right. So it is interesting that the percentage in terms of the number of applications is a small percentage. Is that, would you say that's a relatively small percentage, or just a small percentage, or would you say it's a big percentage?
I think it's hard to tell because I don't think there's any precedent, to look behind. But I think relative to the, any loan that goes out incorrectly is something which is unsatisfactory. But I think I think it highlights that there was a good degree of checks in place to stop that.
And just to be clear, between the 24th of May and the end of June, so in 1 month, banks received 1 million applications in that period of time. I think that statistics is correct.
Yeah, I don't have that exact data.
Ms. Barner, can I just talk to you a little bit about this interesting point about the percentage of fraud? Because as my colleague, Mr. Brown, was saying earlier on, the estimate had come down from 11% to 7%. Then we went through each of the banks. And I think for yourself, you were sort of in the middle, about 1.5%. What do you think accounts for that substantial difference between how the banks are estimating fraud and what is in the domain from government estimates?
I think it's timing, if I'm honest. I think this is our point in time today, and I think we're still relatively early in the journey. So when I look at the third bucket, which is about the self-attestation piece, that may still manifest itself when people fail to make payments, and then we go back and we check, and it looks like they've inflated their turnover. So when I look at if we do an analytical review of what we think that might be, I think I can see my way through to the 7.5%. But most of that, 90% of that, will be self-attestation, not the duplicates, the kind of scheme abuse piece that we've been focusing on today.
So rather than us hoping that you'll be bearing down on that 1.5% to get it to 1% or 0.5%, actually your anticipation is that 1.5% over the months to come will go back closer to the 7%.
I do think the 7.5% will be if people aren't paying us back. If everyone who's inflated their turnover didn't pay us back, it may go up to that. When I look at the book today, there are people who we think may have inflated turnover that are paying us back.
Cheated and got away with it.
Well, I mean, the definition, and I'm not. There's a couple of things actually. One is, if I'm a sole lender and someone has 2 bank accounts, one with one of my colleagues here, I can only see the part of turnover that they have with me. So it's possible that we're all looking at the book and going, well, that looks like it's a little bit high, but actually we haven't got the full picture. That's why the HMRC feed would have been useful, because they're the only people that will know whether the turnover's off. But if they continue to pay, they've taken a loan and then they pay it back, that won't get categorised as fraud.
Interesting minefield of what people define as fraud, I guess, in those circumstances.
Yeah, interesting moral question.
Thank you, Ms. Nichols. Mr. Singh, just if I could just pick on you really for this question. There have been a number of points made on earlier panels about public disclosure of the companies that have received bounce back loans, and that there's really no issue with that being made publicly available. Do you agree that there's no concern if the government were to ask you to make that information available on behalf of the companies to which you've made bounce back loans?
So again, a couple of bits of that. Again, if the question was, would we have any concerns with disclosing the different levels of fraud across different banks?
No, all recipients.
All recipients.
So basically say every single company out of the hundreds of thousands that you may have given bounce back loans to, that information should be in the public domain.
I'm not sure what purpose it would serve, but if that was the decision made with British Business Bank and with Treasury that it was helpful to disclose everyone who received a bounce back loan publicly, we'd happily support that.
So I'll just be clear, on behalf of your customers, you're saying that disclosure, if required, you wouldn't be making representations, say, hold on a minute, that's a problem if we have to do it.
Again, I'm not sure what purpose that would serve.
That's a different question. I'm asking, I know the purpose would be what the government sees,
sure.
And let me give you one example of the purpose, which is we've asked taxpayers to put out £47 billion and more, and some of that may have gone missing. I think the public have the right to know. That's a pretty good reason to know where the money went. The counterpoint is if you, as an experienced lender, felt that your customers' business prospects might be harmed just by the very nature of disclosing they received a bounce back loan.
Yeah. So I think we of course have to go back and check with those businesses whether we've got the rights from a data privacy perspective to disclose their information publicly. I need to go away and check if our current terms with our customers, with our businesses, give us the option or the optionality to disclose their names.
Okay. Sorry, Charity, I wasn't going to ask everyone, but does any bank here have any particular concern they'd like to raise if we were to make that recommendation that the government should require that information to be publicly available? No. Okay, thank you, Chair.
Thank you very much. Andy McDonald.
Just a very fast one. Just in terms of the tools that are available to you in pursuing money where it's been fraudulently obtained, mention's been made of the HMRC data feed that wasn't available. Are there any other asks that you would have of government in terms of your ability to do that better? Is there anything that's stopping you doing that you could identify and say, well, these are the asks we make of government, give us these powers and abilities to pursue it, we could have actually get this fraud debt down further?
I'm happy to go first. I think it probably be back to the more rapid availability of information would help. So if, for whatever reason, someone who had a bounce back loan and they were looking to dissolve the company and dissolve the liquid entity, us finding out sooner that is happening would be helpful, definitely. It almost, the other thing I guess would be helpful to find out is if there were any, if you could get access to Companies House at scale. So currently we do have to go to Companies House on a sequential basis. And if we got like similar to Ms. Banal's previous point about if we get access to Companies House information at scale, that would be helpful.
The only other thing I would add is if there was a centralised kind of enforcement unit, I think we would get economies of scale through doing that. So I think that's something that we've been talking to the BBB about.
Very good. Thank you.
Thank you. And just lastly, just to confirm, I'm assuming that all of your banks are feeding in the data to the dashboards that the British Business Bank were mentioning. You're all nodding. Is that on a real-time basis? Yep, we're all nodding. Okay, great. So when we get to see that, we'll be able to see that live information from you. The only reason I ask is I'm genuinely as confused at the end of this as I was at the beginning, because we've gone from the start of this session being told that this is an enormous problem with, I think, up to 25% of anticipated fraud and a huge loss of public money. The British Business Bank have said it's not that bad, but maybe it's between kind of 7 and 10%. And you guys have come in and said, oh, maybe it's about 1 to 2%. At the end of these 2 hours, I genuinely have no idea how much fraud there is and how much exposure there is to the Treasury for these guarantees to pay you guys back for that. So we will probably continue to be in touch with you on that basis, if that's okay. But for today, thank you so much for giving evidence to our committee. We appreciate it. We'll then bring the session to an end today. Order. Thank you.